into the next 1 week. And besides the final leg of earnings, we don't really have too much to look forward to, considering two very large events are behind us at the moment. Then by that I mean the budget as well as the RBI monetary policy. So a lot of the the volatility has been sucked out, and we're clearly seeing a little bit of profit taking, at least as far as the broader markets are concerned. So while the Nifty and the Sensex are flattish at the moment, we are also seeing about a profit taking and declines coming through in the broader market indices. So let's pull up something like a mid-cap index, which is down, as well as the small-cap index, which is also under a tad bit of pressure. Well, we have to determine if this is, in fact, a bout of short covering. Are these key indices which have outperformed the benchmarks by a huge mile, well, now starting to see some amount of consolidation? These are questions that I reckon will be answered through the course of the next few days. But I just do want to point out a handful of names from the broader markets which are in fact buzzing in trade. So let's pull up some of the pharma names, and of course we do have gains in something like an AstraZeneca. Let's pull that up and see how that one is doing. We also have something like, so AstraZeneca, in fact, is under pressure at the moment. We are looking at a 14% decline there. It wasn't actually a bad quarter. Let's pull up something like, a Lupin. Lupin is up and about. Lupin is, in fact, advancing by as much as 1.2%. We do have advances for something like a UBL as well. Of course, that's where the earnings came through. It was a pretty steady quarter. We continue to track some of these names, but let's get in a management of a company which has announced earnings, and that is RTI Industries. It has been a subdued quarter, but let's not forget that the entire industry has been facing with certain challenges. We have Rajendra Gogri, CMD of RTI Industries, who is joining us on the show right now. Rajendra, good afternoon. Thanks for taking the time out. My first question to you is about your own assessment of the quarter. I want to go back to the end of the second quarter when in the conference call you had suggested that H1 was a challenging one when it came to demand. And you were expecting a little bit more normalization to come through in the second half of the financial year. At least in the third quarter, there are still some challenges. And with the China dumping has not really ceased. In fact, what is your outlook on this one? What is the demand as well as several other performance factors playing out, or rather being a challenge as far as this quarter goes?
Yeah, as you rightly mentioned, at the end of the second quarter, we had mentioned that we are now seeing some demand recovery, especially in the discretionary side, but agro demand was still under pressure, and the same is actually panning out. So the Q3, the demand in discretionary has improved, but agro is under pressure. And going forward, we see that discretionary demand stabilizing in next 1 or 2 quarters, and maybe agro might take longer time, and it will become more specific molecule to molecule. As far as we are concerned, we had guided that sequentially we should be able to increase the volumes and EBITDA. So that's why from Q2 to Q3 we are around 14-15% increase in EBITDA, and we see that this trend continuing over next few quarters.
So would it be fair to assume that perhaps quarter 4, the challenges may persist, but normalization would eventually come down in FY25?
Yeah, I think basically things are getting better on quarter, I think, overall as far as the demands are concerned.
Okay. Right. I also want to talk about, 2 of your recent contracts that you had. One is a 4-year supply of, the specialty chemicals, and this is the 6,000 crore contract that you have, and this is for supplying chemicals over the 5 years. And the other contract is, if I'm not mistaken, it is for Metachlor, and that is a 3,000 contract. I wanted to understand if these contracts, in fact, will add to your margins going forward, or will that depend from year to year and how the pricing of these products come through?
Yeah, the first contract is for 4 years, not 5 years. So it's a 1500 crore per year, and the 1500 will start from the current calendar year itself, calendar year 24, and we have a formula-based contract, so we expect a steady margin coming from that contract. And second contract is actually an intermediate, which is going in agrochemicals, and that also we have a formula-based contract, so which kind of gives a good visibility on the margins.
About specifically about the S-metolachlor contract, we understand that EU, of course, has stopped the renewal and there will be a diversion in that case. And you have also mentioned in the past that it will not be a substantial impact to your company. But can you give us an idea about how things are panning out with respect to this particular one?
Yeah, our intermediate, one of the end use is S-metolachlor, and that got registration issues with the EU. But the market of S-metolachlor in Europe is only about 6 to 8% of the global market. And our intermediate also is going in other agrochemicals also. So as I had mentioned earlier also in con calls, the impact for us, for our intermediate is only going to be about 3 to 4%.
Sure. On a consolidated basis for Aarti Industries going forward, can you give us an idea about the kind of volumes that we can expect, if not for the fourth quarter, then at least for FY25, and also an outlook on your operating profits?
Yeah, for current year we had guided 952,000 crore for FY24, and we should be more towards the 1,000 crore based on the current visibility. And for FY25, earlier we had guided 1450 to 1600, but we see good possibility that it can be between 1450 to 1700 crore EBITDA for FY25.
Okay. And based on your current contracts and the way things are going with respect to your supply with your clients, is your product mix expected to change over the course of the next 2 to 3 quarters?
No, product mix may not have any significant change as such.
Okay. Rajendra, we leave it at that. Thank you so much for joining us and taking us through, the quarter as well as the outlook. There you have it. That's the management of Aarti Industries telling us about, the challenges are behind them and they expect an improvement quarter on quarter going in and perhaps things normalizing back in FY25. But on that note, we are going to slip into a short break. But on the other side, we get you a lot more in terms of stocks that you want to address. Stay tuned in. Welcome back to Hot Money, and we talk about stocks which are buzzing in trade. But among the stocks that we want to address, and stocks and themes, in fact, that we want to address is LIC on the back of earnings. We also want to talk about the mid-cap pharma space, and a lot of these companies have come up with very, very strong earnings. And, well, about a profit-taking for the oil and gas space, specifically something like an ONGC, and even in terms of your OMCs, we are looking at a little bit of profit-taking, but after a staggering up move. The question really is there an opportunity at this point in time? And of course, to take us through all this, we also have with us Gaurang Shah. He's a head of investment strategy at Geojit Financial Services. Gaurang, good morning. Thanks so much for joining us. Before I come to you, let me get in my colleague Harsh to take us through LIC's earnings, which have been strong. Harsh, but can you give us more details here?
Well, yes, absolutely. LIC reported a 49% jump in profit after tax, but that's rarely the metric one sees when it comes to life insurers. So let me first talk about the top line number itself, which expanded by roughly 5% on a year-on-year basis. Not much to show in terms of that top line, but nonetheless, for LIC, they've been able to maintain at least their market share, which is a positive. Very quickly moving on with regard to their VNB margins, which is more appropriate in terms of the profitability metric when you look at life insurance companies. That number has jumped significantly. It came in at around 15.5-16% in Q2. It's jumped to 20% in Q3. Overall, for the full year, it's come in at 16.5%. So very, very strong number in terms of that VNB margin. The margin has improved, profitability metrics has improved because they've sold more of non-par products, which is the more profitable product for LIC. In fact, non-par as a percentage of premium growth grew by 49% on a year-on-year basis. So very impressive number overall in terms of non-par. It's been a solid quarter, and they had guided for a very solid second half of this financial year. Of course, we'll speak with the management later today to get more insights on that result. But otherwise, overall, it was quite a beat with regard to the broad metrics in terms of numbers.
All right, Harsh, thanks for getting us that in-depth analysis on LIC. But Gaurang, I come to you on this one. The insurance space has not exactly been an amazing place to put your investments in over the last few years. LIC, not notwithstanding, I'm talking about the other private life insurers. They haven't given the best of returns. How have you placed on LIC specifically, perhaps vis-a-vis the private players?
Thank you, Agam, for having me on the show, and good afternoon to all of you all. So, as a disclosure, during the IPO, which was at 900 plus levels, we had come out with a IPO note to subscribe from a long-term point of view. And it's been a pretty long-driven process in terms of patience for all the investors of LIC who invested in the IPO to see these kind of levels, because this is the first time in the last couple of days that the share has managed to come up and float above the IPO price. It was languishing for a long period of time below the IPO price, and it has tested your patience. We remain positive. On the fundamental side, we have a standalone buy report on LIC, as well as the other private players, SBI Life, HDFC Life, and ICICI Pru Life. Things have changed, Agam, over a period of time, especially now. Wisdom has grown to a great extent amongst all those individuals who are seeking to take term policy. I don't consider unit-linked insurance policy as a policy because it is not a very well justified product. But term insurance, I think people have not only started to take insurance policy, but get a higher sum assured. By the virtue of that, your outgoes in terms of premiums is higher, and that translates into new insurance premiums for life insurance companies. It will take a while because this is a process. Wisdom has just started to, wake up on the brighter side for all the individuals. Earlier, we used to buy an insurance policy to save tax. Now, people are buying insurance policy so that in case if something has to happen to them, their dependents or family members would be taken care of.
Okay. All right. So, well, that's your view on the insurance space, and specifically in this case, life insurance corp. But we shift focus to another management whose earnings have come through, and I'm talking about Sandhar Technologies. Well, this company has also posted a very strong set of earnings, coming with a revenue growth of around 23% for the quarter gone by. We're also looking at profitability rising by 28% year on year, for standing in, and of course an improvement in margins too. We have Jayant Davar, the co-chairman and managing director at Sandhar Technologies, joining us on the show. Jayant, good morning, or pardon me, good afternoon. Thanks for joining in. It's certainly been a very strong one. How do you assess the quarter, and can we expect this momentum to come through over the course of the next quarter as well as financial year?
Thank you, Agam, for having me on the show. I'm glad that we could post these numbers, but I think this is the beginning of the beginning in some sense in terms of growth. We've done some huge capex in the last couple of years, and we were waiting for it to start monetizing, and that's how it is. So in the quarter, of course, we've done, in terms of numbers, you've already put them up 23%. EBITDA up 34%, EBT up 43%. If you look at the 9 months, we are up 21%, 34%, and 51% in terms of EBT. We think it's the beginning. Insofar as the current financial year is concerned, I think traditionally the fourth quarter is always the best quarter. So we are hopeful that that trend will continue. As such, right now, the order books are good. We are full up. We are steaming ahead. And the capacity utilization of the new projects is also getting optimized as we go forward. If I look at the next year, we will continue our journey of increasing the wallet share with our customers. We do have adequate, or in fact, growth numbers in hand. So even at the industry, which is expected to do maybe high single-digit growth in financial year 25, we believe that Sandhar would be able to do much, much better. So that's where Sandhar is for the moment.
Right, Jayant, you did mention a good order book coming through. Can you tell us and give us more details about where these orders are coming from? Also, if I'm not mistaken, Q4 perhaps could be a one where there is seasonally larger orders coming through as compared to the previous few quarters. What are your expectations here? And going ahead, will your products mix perhaps change, or is it changing? I reckon that a bulk of your revenues come from two-wheeler space. Is that likely to see further diversification as we move into the next few quarters?
We don't really force ourselves into wanting to be in two-wheelers versus four-wheelers. We basically go with the customers and clients, and the idea is that with each OEM, we increase our wallet share with bringing in new technologies, new product lines, and so on and so forth. That's been the journey, that's been the vision, and that's how we've executed it throughout. At this point of time, more than 50% of our orders come from two-wheelers. We are not asking for a change. If that happens, that's fine. Right now, there is a lot of change happening even in the two-wheeler segment. You know that we are leaders in the locking space, and there again, instead of manual locks, we're moving into smart locks. That would probably mean that the multiple in terms of revenue from just that segment would go up by 8 to 10 times for the existing customers itself. So that's a technology change, a consumer demand, which effectively in the next 3 to 5 years will change over completely on the 25 million two-wheelers that are going to be built in the country. We, of course, have moved into four-wheelers. We were very, very strong with Honda, but now we are moving into the others. So that change will happen. But I think the change or volume growth and value growth from two-wheelers will still form the bulk of our revenue for times to come.
Right. Jayant, you also mentioned that a large part of your capital expenditure is behind you. Still, in terms of what we can expect going forward, what areas are you looking to, perhaps put in the balance of your investments coming through?
We are not looking for any disruptive kind of capex going forward. There will be maintenance capex. There are a couple of plants that are still in the project stage. We have two plants, both of them based in Pune, which are likely to get commissioned in the coming year. But besides of that, I don't see any major capex to be done. You would realize that with almost 50 plants, just maintenance budgets, maintenance capex itself adds up to a nice number. So capex will continue, but we will make sure that the capex is restricted to within the depreciation amounts of the company for the next couple of years.
A final question then, Jayant. We've seen a moderation in input costs. What has your experience been, and are you expecting stability over perhaps the next 2 to 3 quarters here as well?
Well, there are macro factors to this, so I would not be the astrologer here saying how the commodities are going to behave. In our industry, of course, we have a pass-through, and irrespective of commodity prices, our margins typically, while they fall down in terms of a percentage, the volume of profitability doesn't really have too much of an effect with the change in commodity prices.
Okay. All right, Jayant, we'll leave it at that. Thanks so much for joining us and taking us.
Thank you very much, Agam.
Yes, well, that's the management of Sandhar Tech telling us about what we can expect from the company going in, and of course the various mixes in terms of revenues that has of course also been discussed. But let's take this up with Gaurang as well. Gaurang, do you follow this company? Any view on this one, and if not, then the auto ancillary space in general?
So, Agam, we had an IPO note on this company, and the floor price was about 330 for Sandhar Tech. One of the promising companies in terms of OEM segment, and as we go forward and as more and more technology-driven initiatives are taken place, not restricted to only four-wheelers, but also going across to three-wheelers, two-wheelers, commercial vehicles. My sense is that all those OEM segment companies like Sandhar Technologies, you have Uno Minda, you have CI Automotive, which are likely to perform in terms of order books growing strong. And not to forget the kind of launches that are lined up, not only for this calendar year 2024, but also going forward into the future. Government's own statement, Agam, was that from number 3 place in terms of automobile manufacturing country, the government's initiatives would be in place to take it to number 1. So you can imagine the kind of transformation that we are going to see for the auto sector, auto ancillary sector, OEM segment, tire manufacturing companies, and battery manufacturing companies.
Right. Well, Gaurang, on that note, we slip into another short break, but don't go anywhere. On the other side, we get you a lot more. Stay tuned to NDTV Profit.